Hi, thanks, and welcome back to the Tech Corner. I'm George Tsilis, Senior Markets Contributor here with the Schwab Network. On this week's edition of the Tech Corner, we're going to be covering technology giant Intel Incorporated. Now, Intel, as you may know, is a leading global provider of computing and related technology products and services. It operates through three primary segments. First off, its client computing group includes PC, CPUs, chipsets, integrated graphics, and AI-enabled client platforms. The data center group includes their server CPUs, Gaudi AI accelerators, networking solutions, and related software stacks for cloud, enterprise, and telecom data centers. And lastly, Intel is also known as a foundry or manufacturing firm. Its leading edge and specialty process technologies and manufacturing services as well as packaging includes Intel products as well as for external customers. The company supports a wide array of semiconductor products, including microprocessors, chipsets, graphic processing units, also known as GPUs, field programmable gate arrays, as well as semiconductor components. Its offerings cater to a diverse range of applications, including computing, storage, networking, artificial intelligence, and security, providing solutions that span from cloud environments to the intelligent edge. Now, Intel faces competition from several key players that we have to consider both in the semiconductor space as well as the manufacturing realm. Companies include Applied Micro Devices, both in CPUs and GPUs, both for PCs as well as servers and data centers. NVIDIA is also a competitor as well, including data center GPUs and AI accelerators, Broadcom in networking and custom application-specific integrated circuits, as well as Qualcomm in select computing and edge markets. Lastly, in the foundry division or manufacturing segment, Taiwan Semiconductor is the global leader that Intel competes with. Now, when it comes to Intel's unique value, it lies in its proposition and comprehensive product portfolio that supports a wide array of computing environments from traditional computing to AI-driven workloads. It is one of the few players that both designs and manufactures advanced chips at scale in the US and Europe, now repositioning itself as an open foundry to external customers as well. Now, let's take a look at some of the recent news on Intel. First off, going back to October 23rd of the year, they reported Q3 earnings and revenues. Revenue posted $13.7 billion, up 3% year over year, which was also above guidance. However, more importantly, it was up 6% sequentially quarter over quarter. They also posted a 23% adjusted profit, which was well ahead of the expectations of essentially break even for the quarter compared to last year. From a profitability standpoint, non-GAAP gross margins improved to 40% of sales. This is several points above the expected guidance prior to the release of earnings, and well above its own historical 5-year average of around 34%. From a segment standpoint, the client computing group revenue increased 5% year over year to $8.5 billion on PC strength, as well as early AI PC demand. Its data center division revenue was $4.1 billion. However, this group was roughly flat year over year, but also demonstrated sharply improved operating income in this segment. More importantly, if you go back earlier this year in 2025, the company secured an $8.9 billion U.S. government investment for an approximate 10% stake. Plus, NVIDIA invested about $7 billion alongside SoftBank in the company, which has materially increased the strength of Intel's balance sheet, as well as helping fund its foundry as well as AI expansion. Also, Intel recently reversed plans to spin out or sell parts of its networking division, deciding that keeping it integrated best supports its long-run AI as well as edge computing strategy. Now, as mentioned, Intel's strategic partnership with NVIDIA as well as SoftBank involving that $7 billion investment positions the company to regain its x86 CPU market leadership and benefit from AI infrastructure growth, supporting significant upside potential. The client computing division is benefiting from a PC refresh cycle with Windows 11 upgrades and a shift towards AI PCs, while the data center and AI division taps demand from data centers upgrading CPUs and deploying Gaudi accelerators for AI workloads. The company's turnaround is also supported by the U.S. government's backing via the CHIPS Act, which provides financial stability and positions Intel as a potential too important to fail company, perhaps offering a compelling risk-reward for investors. And as I mentioned, Intel's Q3 2025 earnings results exceeded expectations with a notable increase quarter over quarter of 6% sequential revenue improvement driven by strong product mix and strategic partnerships enhancing long-term growth potential. Now, based on consensus estimates going forward in the next 4 quarters, profitability is expected to improve, with EBITDA growth estimates increasing to over 9% indicating a meaningful profitability pivot compared to the EBITDA growth average over the last 5 years of negative 3.9%. Now, despite many positives for Intel as a company as well as financials, we also, as always, have to address some concerns. First off, despite operational improvements, Intel's data center and foundry segments continue to face revenue challenges, with Q4 guidance indicating ongoing volatility in a non-linear recovery path. Intel's ambitious foundry strategy involves significant investment, but execution risk remains uncertain as well as high, with competition from Taiwan Semiconductor and Samsung potentially posing substantial challenges. Intel also still faces profitability challenges. We have to consider that net income margin over the past 4 quarters is still less than 0.4%. This is significantly below the sector average of 5%, indicating less efficiency in turning sales into actual profits. Growth metrics are also still concerning. We have to consider that revenue growth year over year is still down 1%, underperforming the sector average of plus 9%, which still indicates a decline in Intel's financial expansion. Intel also presents itself as an expensive valuation company. With a forward earnings multiple of nearly 120 times, this is significantly higher than the sector median of 24, but also quite a bit higher than its 5-year average of nearly 47. Now let's take a look at the technical picture for Intel. First off, looking at the near-term price action, it's exceptionally strong. 1-year price performance of the stock is up approximately 87%, far exceeding the sector median as well as the S&P 500. The stock has also significantly outperformed the broad market over the past 60 trading days when compared to the S&P 500. And upside momentum, as measured by the RSI indicator, remains positive above 50. This indicates bullish sentiment and strong investor confidence in Intel's potential future prospects. The intermediate-term price action is also bullish, as indicated with price rising above the 50-day moving average. Now we have to consider if Intel falls below this important support level, it could trigger additional selling pressure. Intel could also find its next secondary support at the rising 200-day moving average. Now, considering the short-term price action, it's very bullish as the stock trades above its 10-day moving average. Now, despite the short and intermediate-term bullish price action in Intel and positive near-term return relative to the S&P 500, we have to consider the longer-term picture for Intel. The stock is still down approximately 17% over the past 5 years and still well below late 2023 highs of approximately $50. This is due to the ongoing structural and technology shifts I mentioned. Now, in summary, Intel is still a legacy global semiconductor name and has a huge install base in PCs and servers, where it can now layer in AI PC features and AI accelerated workloads on top of its existing x86 platforms. Intel is trying as a company to differentiate with a full stack strategy of CPUs, GPU accelerators, networking, software, as well as its foundry division, while emphasizing openness and geographic diversification of manufacturing. Now, from an investment standpoint, Intel is still essentially a turnaround story, including its processing technologies, artificial intelligence, and its foundry division. Ongoing investment in advanced process technologies and its focus on integrating its CPU and GPU architecture with cutting-edge AI solutions may still solidify its legacy competitive advantage for years to come. Now, thanks again for joining us this week on the Tech Corner. Please join us again next week, where we're going to be covering Alphabet Incorporated, of course, a major technology giant. Don't forget to like and subscribe to the Schwab Network. I'm George Tsilis. We'll see you next week.